Okay, real talk only. We've been answering thousands of questions on health insurance over the past 2-3 years. YouTube comments, DMs on Instagram, emails, Reddit threads, even LinkedIn messages from people we've never met. And it's always the same thing. Do I need a 5 lakh cover or a 25 lakh cover? What if I never get hospitalized? Is this copay clause normal? Can I get insurance if I've already had surgery? So in this video, we're going to tackle all of them. Look, this isn't a sales pitch. It's just straight up answers to the most common, confusing, and sometimes downright weird health insurance questions we get every single day. And if there's a question we missed, drop it in the comments, or better yet, book a free call with Ditto's advisors. We'll break things down one-on-one, no spam and no pressure. The link is in the description. All right, now let's head to the first question. Can I switch to another insurer later? Well, yes, you can. This is called portability. It allows you to transfer your existing health insurance policy from one insurer to another without losing continuity benefits, such as credit earned for waiting periods on pre-existing conditions, specific illnesses, and initial waiting periods. However, also remember that porting is not automatic. It is subject to the new insurer's underwriting process. The new insurer will assess your age, health conditions, claim history, and disclosures before deciding whether to accept your application and on what terms. That's why it's critical to honestly declare all relevant medical history, both past and current. Any concealment or misstatement can result in your application being declined or future claims being rejected outright. Importantly, porting should not be done casually or frequently. It's recommended to build a credible track record with your existing insurer, which can help in smoother claim settlements and renewals. Porting should ideally be used as a last resort, such as when you're dissatisfied with service, your policy no longer suits your needs, or significantly better plans are available elsewhere. Now, you must apply for porting at least 45 to 60 days before your current policy's renewal date. This is essential because the process can take 2 to 3 weeks or more, especially if there are additional queries or medical tests required. Applying early ensures you give the new insurer enough time to assess your application without disrupting your coverage continuity. Folks, we made a whole video differentiating what porting is and what migrating is. I will link it in the description below. Make sure to check it out. All right, now on to the next question. Can I have multiple health insurance policies? Oh yes, absolutely. You can hold multiple health insurance policies based on your needs. Many people do this strategically. For instance, by combining a base health policy, a super top-up, or even separate plans for different family members. Now, this approach allows you to enhance your total coverage, diversify risk, and customize benefits as per specific health or financial requirement. Now, when it comes to claims, you can choose which insurer to approach first. Usually, the base policy is used for the initial cashless claim. If the hospital bill exceeds what the first insurer covers, you can then claim the remaining balance through reimbursement from the second insurer. But just keep in mind, no insurer will pay for the same expense twice. Double recovery is not allowed. You must submit the claim settlement summary and documents from the first insurer when filling with the second one. Always coordinate well between insurers and retain all original and certified copies of bills and discharge summaries. Having multiple policies is perfectly legal and often beneficial as well, but managing them properly during claims is the key. All right, third question. Why should I take a retail health insurance policy when I already have corporate coverage? Now, we've covered this multiple times before, but we'll go again. You see, while a corporate health insurance policy is a great benefit, it's not reliable for long-term or complete protection, and here's why. Having a retail or a personal policy in addition is a smart move. Now, folks, job security is uncertain. If you change jobs, take a break, retire early, start up, or are laid off, your corporate cover may stop immediately. Corporate policies are controlled by your employer. They can reduce the coverage amount, change benefits, or even exclude certain treatments without your say. Some new employers may not offer any health insurance or may provide one with very subpar benefits. A personal plan ensures uninterrupted coverage, complete customization based on your requirements, no matter where you work or if you're between jobs. Also, starting early helps you serve waiting periods in your retail plan well in advance so that if an emergency strikes, you're already eligible for claim. In short, your retail plan is your own permanent safety net. So always get a personal plan along with your corporate plan. All right, let's go to the next question. Should I go for a public insurer or a private insurer? All right, we made an in-depth video on this. but let me share a couple of points here. Both public and private health insurers have their own pros and cons, and your choice should depend on your health needs, age, service expectations, and comfort with technology. See, private insurers generally offer faster claim processing with in-house claims team, reducing dependency on TPAs or third-party administrators. Now, there are wider hospital networks ensuring better cashless claims, modern feature-rich plans with benefits like restoration of sum insured and unlimited recharge, wellness perks, and digital app support. A tech-savvy experience from onboarding to claims, but public sector insurers work a little different way, like New India Assurance, Oriental, United India, etc. They may have lower premium costs, but trusted government-backed reputation. However, most PSU health plans are often basic and orthodox with slow product innovation. They lack several features now considered industry standard, such as restoration benefit, comprehensive wellness support, or flexible room rent options. It has limited hospital networks, reliance on TPAs, and longer claim turnaround time. That's also very common. Now, financially, many show high incurred claim ratios and very low solvency, requiring periodic capital infusion from the government. Now, private insurers, on the other hand, may have stricter underwriting and may revise premiums upward more aggressively at renewals based on risk and portfolio performance. But folks, the bottom line is, if you value speed, convenience, modern features, and digital support, a private insurer is usually a better fit. But if you prefer lower costs, a basic plan, and don't mind more traditional service model, a public insurer may be suitable. Alright, next question. Can I add new family members to an existing policy? Definitely you can. Most insurers allow you to add new family members such as spouse, newborn child, or parents, usually at the time of policy renewal. However, this is subject to the insurer's underwriting and approval. The addition of new member may involve medical underwriting, especially for older members or those with health conditions. Premium adjustments based on age and health profile of the added member, and in some cases, medical tests. Also, family floater plans typically have limitations on the number of adults and children allowed under a single policy and the eligible relationships. It's usually restricted to spouse, dependent children, and sometimes parents or in-laws, but not siblings and cousins, etc. To ensure a smooth process, it's best to inform your insurer in advance and submit the required documents well before the renewal date. For additions like a newborn, many insurers allow inclusion after 90 days of birth, depending on the policy. Alright, next question. Do I need to disclose my health conditions while buying health insurance plan? What if I don't? Yes, you absolutely need to disclose all of your existing health conditions like diseases, past surgeries, medications, or lifestyle habits to the best of your knowledge when applying for health insurance as a good faith disclosure. This ensures your policy is valid and future claims aren't disputed. If you don't disclose important medical information and the insurer finds out later, especially during a claim, they can reject the claim, cancel the policy, and not refund any premiums paid. That said, IRDAI has introduced a moratorium period of 5 years, revised from earlier 8 years. Once your policy has been continuously active for 5 years, the insurer can't reject a claim on grounds of misrepresentation or non-disclosure unless they can prove a clear case of fraud. However, it's important to note that non-disclosure is not clearly defined and insurers may still interpret omissions very strictly. So, it's best to be upfront from the start to avoid any disputes. Alright, next question. Can I increase my sum insured later? Will I have to serve waiting periods again? Now, yes, you can increase your sum insured later, usually at the time of policy renewal. However, any increased coverage will come with fresh waiting periods. Your premium will also be revised accordingly. The insurer will reassess your application and may request updated medical information before approving the increase. Now, if they find any red flags, the request could be denied or come with conditions. That's why it's always wise to opt for an adequate right cover from the beginning to avoid complications or coverage gaps later on. Alright, next question. If I move cities or states, does my health insurance policy remain valid? Yes, your health insurance policy remains valid across India regardless of your location. However, insurers follow zonal pricing, which means premiums are based on the cost of healthcare in your residential zone. Example, metro versus non-metro cities. So if you move to a different city or state, you should inform your insurer and update your address. This helps avoid claim issues and ensures your premium is adjusted correctly if needed. Alright, next question. Are there any blacklisted hospitals under health insurance and how can I check if a hospital is one of them? Yes, insurers maintain a list of blacklisted or delisted hospitals. Now, these are healthcare facilities that have been removed from insurers' network due to reasons like fraudulent practices, overcharging, or poor service standards. Now, if a hospital is blacklisted, you can't avail cashless treatment there, even if it was earlier part of the network. You may still get reimbursement, but the insurer will scrutinize the claim heavily and approval is not guaranteed. To check if a hospital is blacklisted, visit your insurer's official website or use their app. Look under the network hospital section. They usually display active empaneled hospitals. Alternatively, contact customer care or your TPA with the hospital name for confirmation. Alright, now let's head to the next question. Is a medical test required before getting a health insurance policy? Now, yes, medical tests are often required, but it depends on your age, medical history, lifestyle habits, and the sum insured you're opting for. Now, if you're young, healthy, and opting for lower cover, a simple telemedical or phone consultation might be enough. However, if you're older, have pre-existing conditions, or are applying for a higher sum insured, the insurer may ask for physical medical tests like blood work, ECG, or BMI checks. Basically, the insurer assesses your risk profile and decides what's needed. They'll inform you about the process during the application. Generally, cost of these tests will be borne by the insurer if the policy is issued. If it's rejected or you reject their counteroffer, the cost will be deducted from your refund. Alright folks, we have a lot more of these questions coming your way, but we'll break it down in the next part of the same video. So stay tuned. I will see you in the next part. Until then, happy insurance hunting.